Hey there, Matt Walsh from Academy Home Buyers, and I'm also a licensed agent with EXP in Virginia Beach, Virginia. Okay, today we're going to talk about taxes and real estate, the type of taxes that you have to pay when you're buying or selling or owning real estate. All right, so disclosure here, I am not a tax attorney, I am not a CPA, I am not a tax man. I am just giving you information that you should then take to your tax preparer or your attorney. All right, I'm giving you the questions that you should ask, the things that you should know about, the things that you should know to ask. Okay, all right, if you want to sell your home, give me a call, shoot me a text. I will give you a fast, fair cash offer today. You can click the button below this video, put your information in, and in a couple of hours, you will have a solid offer to purchase your home. All right, let's get to it. The first tax that we all should know about are property taxes. What are property taxes? These are the taxes levied by your local government against your property. Some states and places have very high taxes, some have very low property taxes. Okay, what do? They are used to fund your local services, your police, your fire, your schools, your library, and then in some cases it's your sewer and your water, in other cases it's not. That's why it's very important when you're comparing property taxes to see what is included. For example, in certain parts of New York, in Long Island, where I came from recently, the sewer was part of your property taxes. And in Pennsylvania, where I own some other property, the sewer is separate. So you think you may have a lower tax, but then you get a separate bill for the water and sewer. Same thing here in Virginia Beach, right? We do have pretty low property taxes. We have actually very good property taxes in Virginia Beach. We're known for that. But there are certain things like the water and sewer that are not included, and I get a separate bill for that later on, okay? So when you are selling your home, how do you figure out your property taxes, okay? Well, property taxes are paid on an annual basis, usually paid in 2 installments, 6 months and then 6 months. Most places do that, okay? So now let's say you're selling your home in the middle of the year at some point in time. Well, it's very simple. They take your annual taxes and divide it by 365, the number of days in a year, and that's how much you owe each day. So let's say you've owned a home for 143 days of the year. Well, then you will owe taxes for 143 times your daily rate. And they will figure that out at closing. Maybe you'll get a little bit of money back if you've prepaid your taxes, or maybe you'll owe a little bit and it'll come out of your closing if now you owe a bit more. Maybe you only paid to 130 days, so now you owe the additional 12 days. It's a very simple calculation and nothing you should worry about, but you should know about it. Number 2 are capital gains taxes. All right, what are capital gains taxes? All right, capital gains are taxes due to the government based upon profits derived from the sale of capital assets. We can do a whole story about what capital assets are, but a home is a capital asset. And very often, if you sell it for a lot of money, the government is going to say, you owe us some money. All right, taxation is theft. Oh well, they got the big guns and they're going to steal it from us. Okay, in general though, the IRS allows for the first $250,000 for single people and married people up to $500,000 of profit to be tax-free in most cases. Okay, so what does that mean? Let's look at an example. If you purchase a home for $200,000 and then you later sell it for $400,000, right? That means you would have a $200,000 capital gain, and in most cases, that would be tax-free income. Okay, another example, you purchase a home for $200,000 and you sell it later for $800,000. That's a $600,000 capital gain. Some of that is likely going to be taxable. Okay, a single person would likely be responsible for the total gain of about $350,000, right? The $600,000 gain minus their exemption. Or a married couple has a $500,000 exemption, like we just said. They would likely be responsible for the $600,000 gain minus the $500,000 exemption. They would owe taxes on $100,000 of gain. Okay. Again, this is something you have to talk to your tax preparer about. There are rules. It has to be your primary residence. You can't go selling your investment property for all these gains and not paying taxes on it. No. Uncle Sam doesn't like that. Okay? It has to be your primary residence. You have to have lived in it at least 2 years of the previous 5 years. And you cannot have claimed a capital gains exemption in the previous 2 years. There's a link to the IRS information in this video, as well as in the written form of this blog post, of this video post. Okay? But the key is, pay attention. You may owe some capital gains. A third tax you have to worry about, maybe, is tax recapture. What? Okay, this really only affects investors. So if you are not thinking about selling an investment property or a property that had been held as a rental, you can skip to the next section. But basically what it is that the tax code states that real assets, real property, have to be depreciated over time. So the government gives you as an owner credit for the lost use of the property. Let's say it's worth $100,000 today. They know that next year it's likely worth less. And the year after that is less because it's been used. This doesn't really make a whole lot of sense in real estate because that doesn't happen in real estate. But there are other things. Let's say you own a car and the car is worth less every year. That's true. Real estate, up and down. So people don't really understand it. But basically the gist of it is the government gives you a tax credit. That's the wrong terminology, but they give you a credit for taxes for every year that you own a property. But when you go to sell it, they want that money back as tax, and it's tax recapture. Again, I understand it. I'm an investor. I can talk you through it over the phone. I'm not going to do that on this video because I am not a certified tax person. But if you are selling a property that you had maintained as a rental property or some other investment property, not your primary home, and you depreciated it on your taxes, make sure you talk to your tax person about tax recapture because you will owe it when you sell unless you use like a 1031 exchange. All right. Next, the fourth type of tax we have to worry about is the transfer tax. Everybody has one. Every municipality has some version thereof. Basically what this is a tax. They don't necessarily call it a tax. It may be called a fee. That's government lingo for tax. That to record your mortgage with the county records, or to record the deed, or change the deed ownership. These are the costs that the county or the locality charges to ensure that your property is properly recorded with the government and that your chain of custody is guaranteed. Okay, this can range from a few $100s to a few $1,000s. That all depends upon the municipality. So, in recap, what do we have? Okay, we have our general property taxes, which everyone pays regardless. Some places are a lot, some places are a little, some places are right in the middle. It all depends. Okay, you have capital gains taxes, which is the tax on the profit from the sale of your property. The transfer taxes, which is the government fees to process and record the transfer of your property in public records. And then tax recapture, which is if you are selling a property that had been used as a rental property or some other income producing property and the government let you depreciate it on your taxes over time. Well, when it comes to sell, the government wants that depreciation back. Okay, if you have any questions about any of this, shoot me a text, shoot me an email, give me a call, whatever it is. If you are looking to sell a home in the Virginia Beach, Hampton Roads area, I am an agent and a buyer. Give me a call. I will give you the best answer and point you in the right direction no matter what it is. All right, have a great day.